Welcome to Talk Tickers. We're the show that dives deep into earnings calls, pulling out the insights you need as an experienced investor. Today, we're getting into the Cloudflare Q1 2025 earnings call. Let's jump right in.
Okay, yeah. So Cloudflare's first quarter for 2025 looked pretty strong overall. They reported revenue of $479.1 million. That's a 27% jump compared to the same time last year. Quite significant.
27%? Wow. That's definitely solid growth. What about customer numbers, especially the big ones?
Right, good question. They saw really good growth there too. Customers paying over $100,000 a year. That group grew 23% year over year. They're now at 3,527 of those customers. And importantly, the revenue from these larger accounts makes up 69% of their total revenue now.
69%. So up from last year.
Yeah, up from 67% last year. So they're increasingly reliant on these larger deals. And we saw record additions in the really big spenders too. Think customers spending over $1 million annually, that cohort grew 48%. And the 5 million plus group, up 54% year over year. Huge jumps.
Okay, so the big fish are getting bigger and more numerous. What about keeping the customers they already have? Retention, churn.
Yeah, dollar-based net retention held steady at 111%. So existing customers are, on average, spending more, and they actually managed to improve churn rates, which, is always a good sign for stability.
Okay, 111% DBNRR and lower churn. Those are definitely compelling numbers. So what's driving this? What were the key growth engines this quarter?
Well, a few major things stood out. They landed some really significant contracts. I mean, really significant. They signed their largest deal ever. It's a 5-year contract worth $130 million.
$130 million. Wow. What's that for?
Primarily for their Workers developer platform. And get this, the customer is a major tech company that switched from a traditional hyperscaler.
Switching from a hyperscaler. Why?
They cited better performance with Workers, lower development costs, and it's the more modern platform overall. Workers lets developers run code right at the edge on Cloudflare's network, which can be faster and more efficient.
Right, that edge computing angle. Makes sense. Any other big wins?
Yeah, another interesting one was their longest duration contract ever. 7 years, $12.7 million. This was with an international critical infrastructure provider, and it was mainly for their SaaS portfolio.
This is the secure access service edge stuff, right? Combining networking and security.
Exactly. So a 7-year commitment there really speaks to the perceived value of having that unified platform for critical functions,
It really does. So it's not just adding clients, it's locking in major players for the long haul, sometimes pulling them away from the big cloud provider.
Precisely. And we saw that same kind of momentum with their Zero Trust solutions as well.
Zero Trust. Always a hot topic. How are they doing there?
Very well, it seems. Remember, Zero Trust is that never trust, always verify model for security. Cloudflare actually displaced multiple vendors in several large deals involving Zero Trust this quarter.
Multiple vendors. So consolidation plays.
Yeah. Exactly. Customers simplifying their security stack. Examples included a U.S. government entity and also a Fortune 500 tech company. And again, that tech company migrated from a hyperscaler drawn by Cloudflare's security and automation features.
Interesting pattern emerging there with the hyperscaler displacement.
It is. And we can't forget the Workers platform again. Beyond that huge $130 million deal, the usage metrics were just, explosive. Workers' AI inference requests were up nearly 4,000% year over year.
4,000%.
Yeah. And AI gateway requests up over 1,200% year over year. It really signals that developers are actively using the platform for cutting edge AI stuff.
Okay, those growth numbers are certainly eye-popping.
Yeah.
Beyond these specific wins, what was the general tone from management? What are their strategic priorities?
The key words were definitely disciplined execution. They kept hitting that note. Plus, strategic investment. They're putting money into their go-to-market teams, engineering talent, and of course, product innovation.
And are they still focused on that rule of 40, balancing growth and profit?
Absolutely. They reaffirm their commitment to that, aiming for that sum of revenue growth and operating margin to be around 40%. But they did say they're willing to reinvest aggressively, especially in go-to-market, if the data shows clear opportunity. So not blindly sticking to it if growth is there for the taking.
Makes sense. Adaptability.
Right. They also highlighted their network architecture, specifically how it helps them fend off massive DDoS attacks without breaking the bank, cost-wise.
The distributed denial of service attacks? Their network helps there.
Apparently, yeah. They claim it's such an advantage that competitors are actually sending referrals their way sometimes.
Referrals from competitors, that's quite a statement.
It is. And in the SAE market, they feel their success comes down to feature parity now, plus superior performance again, thanks to that global network and the value of that unified platform we mentioned.
So that network infrastructure really is a core advantage across the board then.
It seems to be, yes. They also mentioned gaining traction with government agencies globally.
Why government specifically?
It's partly that general shift away from traditional on-premise hardware, which governments are part of, and Cloudflare's comprehensive zero trust offering fits that need well.
Okay. Anything looking further ahead? New tech?
Yeah, they touched on their Model Context Protocol Server, or MCP. It's still early days, but the adoption is promising, they said. The idea is that MCP helps AI agents interact securely with the internet, so it could position Cloudflare right in the middle of that whole future AI ecosystem.
MCP for AI agents.
Interesting.
Okay, let's pivot to the financials. What guidance did they give, and how are they viewing the macro picture?
All right, for Q2 2025, they're projecting revenue between $500 and $501 million. That would be about a 25% year-over-year increase. Operating income is expected between $62.5 and $63.5 million, and diluted net income per share around 18 cents.
Okay, so continued 25% growth projected for Q2. What about the full year? Did they update that?
They maintained their full year 2025 guidance. Revenue expected between $2.90 and $2.94 billion. That's also around 25% growth year over year. And full year operating income projected between $272 and $276 million, with diluted EPS between 79 and 80 cents.
So holding steady on the full year guidance despite, well, everything going on in the world. Seems confident.
That's the impression, yeah. They definitely acknowledged the volatile external environment. They framed their outlook as prudent, but underlying that was clear confidence in their long-term strategy. And interestingly, they even mentioned the potential for accelerating growth down the line.
Accelerating. Okay. Did they give any color on what they're seeing from customers right now?
Yeah, they noted some stabilization in their customers' businesses, which is positive, and less pricing pressure in the market, which they welcomed.
Less pricing pressure is always good.
Definitely. They also mentioned they're watching the whole shift from a search-driven internet to an AI-driven one very closely, especially the impact on media companies. Apparently, they have solutions to help media companies control how AI models access their content, which could be a growing need.
Controlling the AI scrapers. That makes sense. Any other macro points? Tariffs. Supply chain.
They said they haven't seen any real impact on internet traffic from all the tariff talk. They expect sales productivity to keep improving. And on the supply chain front, they feel they're managing it well with diverse sources and strategies. Pretty standard stuff there.
Okay, so pulling it all together then. For listeners tracking Cloudflare, what are the sort of main things to take away from this quarter's call?
I'd say, look, the big takeaway is their success in landing these large, long-term deals, especially with workers and zero trust. It really signals growing enterprise trust and adoption.
The fact they're displacing incumbents, even hyperscalers, seems key too.
Absolutely. It highlights a real competitive advantage, whether it's performance, cost, or just the integration of their platform is clearly resonating. And then there's the future-facing stuff. Their investments in areas like AI agents with the MCP server, it puts them in a good position for where the internet might be heading.
Right. Playing the long game.
Exactly. So despite the macro uncertainty, their execution looks disciplined, innovation seems strong, and customers appear sticky, judging by the stable retention and improving churn.
Okay, so that leads us nicely into our This Is Not Financial Advice segment. Based on all this, what's an outrageous but plausible trade idea you've cooked up?
All right, outrageous but plausible. Let's see. Given the strong momentum we're seeing with the Workers platform and this broader shift towards edge computing, you could think about a paired trade. Go long Cloudflare, obviously, betting on continued market share capture in edge development.
Okay, long Cloudflare. What's the other side?
The other side could be potentially a short position on, say, more traditional centralized content delivery network or CDN providers, particularly those who seem slower to adapt to the edge computing wave.
So betting against the legacy CDN model.
Sort of. The thesis is that as the advantages of edge platforms like worker speed, cost, development agility become undeniable, traditional CDN models might face pressure. Companies slow to adapt could lose out while Cloudflare benefits. It's definitely a longer-term, higher conviction play on how internet architecture is evolving, not a quick flip.
A multi-year play on the evolution of the cloud and CDN space.
Interesting. So wrapping up, Cloudflare's Q1 call showed a company, well, firing on multiple cylinders, wouldn't you say? Securing big wins, innovating, and navigating the current environment pretty effectively.
Yeah, their platform strategy and focus seem to be positioning them well for what's next on the internet.
Definitely one to watch. Now remember everyone, this is just our analysis based on the earnings call. It's purely for informational purposes. Any investment decisions you make should absolutely come after your own detailed research and due diligence. We strongly encourage you to look deeper into Cloudflare yourself. What are your thoughts on their path forward? Feel free to join the conversation.